There are few provisions in company law which I am going to read through from the material what I have now currently related to audit and auditors. In the instant case, Mr. A is holding appointment in 4 companies, Mr. B is having appointment in 6 companies, and Mr. C is having appointment in 10 companies. In aggregate, all 3 partners are having 20 audits. So this is a case where we are talking on the limit of number of audits an individual or a firm of audit can hold at any point in time. So the limit is 20 audits. A firm of auditors can hold up to 20 audits in aggregate, not more than that in any financial year. So let me read through the material context. As per section 141 subsection 3G of the Companies Act 2013, a person shall not be eligible for appointment as an auditor if he is in full-time employment elsewhere, or a person or a partner of a firm holding appointment as its auditor if such person or partner is at the date of such appointment or reappointment holding appointment as auditor of more than 20 companies other than one person company, dormant company, small company, and private company having paid up share capital less than 100 crore rupees, meaning the limitation is not applicable for one person company, small company, dormant companies, and private limited company having paid up share capital less than 100 crore rupees. This is the limitation. Okay. As per section 141 3G, the limit of 20 company audits is per person. In the case of an audit firm having 3 partners, there is a firm, there are 3 partners in the audit firm. The overall ceiling will be 3 into 20, which means 3 into 20. Okay, 20 audit per partner, 3 partner, which is 60 audits, 60 companies audit. Sometimes a chartered accountant may be a partner in a number of auditing firms. In such a case, all the firms in which he is a partner or proprietor will be together entitled to 20 company audits only on his account. If we talk about a firm of auditors where there are 3 chartered accountants, qualified chartered accountants, and they are performing the audit, so each limitation for each of the auditor is 20 audits per partner. But when we talk about single partner, single chartered accountant who is performing audit, the limitation is 20 audit, 20 companies audit. That is the ceiling limit what we have according to provisions of Companies Act 2013. Therefore, ABC and Co can hold appointment as an auditor of 40 more companies. Total number of audits for which the firm would be eligible is 20 into 3 equal to 60 audits, because 20 audit per partner, there are 3 partners, so 60 in total in aggregate. Number of audits already taken by all the partners in their individual capacity: 4 plus 6 plus 10, 4 for A, 6 for B partner, and 10 for C partner. So altogether coming to 20 partners. So remaining number of audits, how much they are eligible to take? Still number of audits can be availed by the firm is 40, because only 20, right? I told per partner 20, 3 partners, so 60 audits they are eligible. Ceiling limit for them is 60, not more than 60. In this case they have only 20 audits, so still they can go up to 40 more audits they can undertake if they wish to. With reference to above provisions, an auditor can hold more appointment as auditor, that is ceiling limit, as per 141 3G, already holding appointments as an auditor. Hence, Mr. A can hold 20 minus 4, 16 more audits. B can hold 20 minus 6, which is already 6 is holding. So total is 20. Another 14 more audits he can handle. Mr. C can hold 20, but 10 he is already having existing. Another 10 he can go for. So total it will become 20. So this way the ceiling limit of an company's audit per auditor and the firm of auditor is clearly stated in this illustration. I hope with this the ceiling of number of audits is understood by us. So I am going to next provision now. Uh, Next provision. In the given case, the requirement of the auditors regarding additional information, that is director's report and MDA, without which they have not been able to conclude the audit, does not look valid. Auditor is required to audit the financial statements and express an opinion on the same. The auditor does not audit these additional information. So what I have done is I have come to illustration directly without reading the question. Sometimes what will happen, my experience, and I have also heard from experts, the model which we use is question answer, question answer, question answer, right? It becomes monotonous. Sometimes we may not get interest to read in that format. No doubt in examination we should remember that way, this is a question, this is the answer, to score more marks. But practically speaking, right, sometimes when we lose focus, when we lose interest to study, interest to read the content, the academic books content, right, that time what we can do to get interest, don't focus on question, rather focus on illustration, then try to link with the question. This looks little weird, but trust me, I tried doing this and I'm enjoying it. Sometimes, right, it's very easy to read the illustration first, then link that with the question. It really makes sense. That's what I'm going to do now. I read illustration, right? I did not understand what it is. So now I'm going to read the question. And then, yes, illustration is somewhere in my mind because I already read before the question. Now when I read the question, automatically I can link little bit, with the kind of experience, with the kind of knowledge what we have over the period of time. Okay. MNO Limited is a company, listed company in the business of trading of various products. MNO, there is a company, listed company. It's the business of trading of various products. Company also plans to start manufacturing of certain products. It is also planning to manufacture certain products which are currently traded. During the course of its audit, the auditors completed all the procedures related to audit of financial statements. However, auditor got stuck on one procedure because of which audit has not got concluded. Auditor got stuck with one procedure and auditor did not get concluded. Auditors are waiting for certain additional information. Auditors waiting for additional information. What is additional information? They are waiting for director's report and management discussion and analysis. MDA in short they have written, which is nothing but management discussion and analysis for their review. They are waiting for additional information. What is one thing is director's report and the second thing is management discussion and analysis for auditor's review. However, the management is not ready with this information and wants the auditor to complete their work without review of this information. Please advise as per legal requirements. This is the question. Now again I am going to read the answer so that it makes more sense. In the given case, the requirement of the auditors regarding additional information, that is director's report and MDA, management discussion and analysis, without which they have not been able to conclude the audit, doesn't look valid. The auditor is required to audit the financial statements and express an opinion on the same. The auditor does not audit these additional information. There is no need to audit the additional information. What is the meaning here? There is no need. What is the priority of the auditor while performing the audit? Auditor is required to audit the financial information, financial statements, and express an opinion thereon on the same. Accordingly, there are different types of opinions. We will come later, as we are not studying the audit now, we are studying the company law now. Okay, so that's why I'm restricting myself with this point. So the auditor does not audit these additional information. What additional information? Director's report and management discussion and analysis. Auditor is not auditing director's report. Auditor is not auditing the management discussion and analysis for his review. That may be additional information for him, but the primary point, the focus point for him is audit of financial statements. Once he is done with the audit of financial statements, once his opinion is shared, he can conclude his audit. That is what this question, very simple question, says. Okay, and now coming to next question. I am coming to next question now. I covered two questions. One, first I did ceiling of audit, ceiling on number of audits of individual, of a partner, of a individual auditor, and if there is a 3 partners in a firm, what is the limitation? That is 20 audits per partner, and 3 partners, 20 into 3, 60 number of companies audit can be performed that by firm. But if we talk about individual auditor, 20 number of audits, ceiling of number of audits is 20 per partner. Okay. Second question I talked is about audit did not get concluded because of reasons. What reasons? They said because of director's report and management review and analysis information is additional information which auditor is writing that they want to conclude. Is this requirement needed for the auditor to stop his conclusion of audit? No. The answer says no. That is not his focus. Review, audit of director's report, audit of management review and analysis is not the focus of auditor. That may be secondary or additional information, but that is not the primary objective. The primary objective of the auditor is to perform an audit of the financial statements, and once done, he can share the opinion accordingly basis his professional skepticism, and after that he can conclude his audit. No need to wait for director's report or the management review and analysis information which is considered as an additional information. Now I am coming to the another different case study. Okay, different illustration. As per section, I am again going through the answer first. Okay, as per section 143(12) of the Companies Act 2013, the auditor is required to report to the audit committee or to the board of directors, and where applicable to the central government, an offence of fraud in the company by its officers or employees only if he is the first person to identify, note such instance in the course of performance of his duties as an auditor. In this case, the suspicious transactions have been identified by the management first, and information about the same has been given by the management to the auditor. Here we have to focus. It is not auditor is giving this information, fraud information, to management first. Management is giving this fraud information to the auditor first. Accordingly, auditor should report about this matter to the audit committee and board of directors, but the auditor would not require to report the same to central government. Why? Because auditor is not reporting this first to the management, rather management on their own is reporting to the auditor. In this case, auditor has to report, the responsibility of the auditor is to report to audit committee and the board of directors, but not to the central government, mind you. Okay. Now I am going to come to question. NSH Limited is engaged in business of retail and is listed on National Stock Exchange, NSE. The company recently acquired a business undertaking to expand its business. During the year, certain transactions amounting to thousands of rupees were carried out by the employees, directors of the companies, which the management found suspicious and appointed a forensic consultant to carry out their review. Pursuant to the review process, certain suspicious transactions were identified by the management, and the management reported these transactions to the appropriate authorities. During the course of statutory audit, such transactions were also made known to the statutory auditors. How should the auditor deal with such matter? See, there is a provision in Companies Act 2013, and I don't want to state that in a wrong way, okay, because I don't remember exact value what it was mentioned in the section, but yes, I have read that, and little point I still remember. when auditor is finding the fraud occurring in the company, it is the auditor responsibility to inform. Again, there's some threshold, okay? Above that threshold, if he's finding the fraud, then his responsibility to inform audit committee, board of directors and central government to take further action on the company where the fraud is incurred by employees and higher level management of the organization. In case company itself is coming forward honestly and saying this is a fraud happened in the company, when the management itself is coming to auditor and sharing this fraud related information to auditor, then auditor responsibility restricts to share this information with audit committee if audit committee is there, else restricted to board of directors, and auditor should not report these to central government because auditor has not reported first. It is reported by management to auditor. To keep it simple, if auditor is reporting to management on this fraud, then yes, his responsibility to report to audit committee, AC, board of directors, BOD, and central government, CG in short. But if management is reporting this fraud to auditor very straightforward with honesty, then auditor responsibility restricted to reporting to audit committee and board of directors only and not to central government. Okay, thank you. And next I'm coming to next section. Next case study. Number as per the section 1. Sorry, no, it's not number. It's as per section 145 of the Companies Act 2013. Qualifications, observations, or comments. Qualifications, observations, or comments on the financial transactions or matters which have any adverse effect on the functioning of the company mentioned in the auditor's report shall be read before the company in general meeting and shall be open to inspection by the member of a company. Whether entire audit report, what is the question? Whether entire audit report need to be read before the company in general meeting. This is the question. What is the question? Is there any need to read entire audit report of the company in general meeting? Before the company in general meeting, this is a question. Answer is no. As per section 145 of the Companies Act 2013, qualifications, observations, or comments on financial transactions or matters which have an adverse effect on the functioning of the company mentioned in the auditor's report shall be read. What the matters only which has adverse effect as per the opinion of an auditor which is reported in the audit report shall be read before the company in general meeting and shall be open to inspection. It shall be open to inspection by any member of the company. This is the case study. Coming to next case study. Next case study. In this case study, I think I should read question first. Regarding the general meeting for which notice is served on auditor, whether auditor is mandatorily required to attend the said general meeting. Whether auditor is mandatorily required to be attend the said general meeting. Answer is and yes, while no in case of second, because as per section 146 of the Companies Act 2013, the auditor shall, unless otherwise exempted by the company, unless it is exempted by the company, auditor has to attend either by himself or through his authorized representative who shall also be qualified to be an auditor in any general meeting. Yes, auditor has to attend the general meeting. It is a responsibility of the auditor to attend the general meeting, except when it is exempted by the company. Attend either by himself. He has to attend either by himself or he can appoint any representative, authorized representative who shall be qualified, who shall also be qualified to be an auditor to attend the general meeting. If yes, whether he is required to attend the general meeting personally. So there are two questions. First question, is auditor required to attend the general meeting? Answer, if yes, then what is the requirement? Whether he has to attend, he should attend personally. Yes, he should attend personally. In case if he is not able to do, then he has to represent in he can represent in authorized representative. He can authorize a representative who can attend the general meeting on his behalf. The requirement is, but he should also be qualified to be an auditor to attend the general meeting. Okay, next question, I am reading the question. Okay, can a professional limited liability partnership which have CAs and CMAs as its partners appointed as cost auditor under section 148 as well as statutory independent auditor under section 139? What is the question here? Can a professional limited liability partnership which have chartered accountants and cost and management accountants as its partners appointed as cost auditor under section 148 as well as statutory independent auditor under section 139? No, the answer is no. Can a professional which have CAs and partners appointed as cost auditor and 148 as well as statutory independent auditor under section 139? No, because as per provision to section 143, no person, firm including LLP appointed under section 139 of as an auditor of the company shall be appointed for conducting the audit of cost records or vice versa. Answer is no, because as per proviso to section 148 subsection 3, no proviso or firm including limited liability partnership appointed under section 113 as an auditor of the company or shall be appointed for conducting the audit of cost records or vice versa. Okay. Okay. In this question, there are three different cases. Let me study the question first. P Limited appointed XYZ and Co. an audit firm as auditor of the company at the annual general meeting. P Limited appointed XYZ and Co. an audit firm as auditor of the company at the annual general meeting held on 30th September 2021. Mr. X, Y, and Z are partners in X, Y, Z and Co. With reference to the Companies Act 2013, examine the validity of appointment of the X, Y, Z and Co. in which the following cases separately. Mr. Q, wife of Mr. X, has invested in equity shares of P Limited having face value of 1 lakh. So we have read right this provision little before or in my other video. Auditor or his relative are not supposed to hold any securities in the company where such person is appointed as an auditor. But further to that, the provision also says a relative can hold the securities in that company up to face value worth rupees 1 lakh. If it is above face value of 1 lakh, the auditor is disqualified to be appointed as an auditor in that company. But if it is up to 1 lakh, a relative is holding securities in that auditing company up to worth 1 lakh face value, then 1 lakh rupees worth face value, then there is no disqualification here. Auditor is qualified to be appointed as an auditor for that company. So in the first case, I think Mrs. Q, wife of Mr. X, has invested in the equity shares of P Limited having face value of 1 lakh. So let me read the answer for this particular section. Okay. As per section 141 subsection 3D1 of the Companies Act 2013, a person who or his relative or partner is holding any security of or interest in the company or its subsidiary or of its holding or associate company or subsidiary of such holding company, such person cannot be appointed as an auditor of the company. However, the relative of such person may hold. However, the relative of such person may hold security or interest in the company of face value not exceeding 1 lakh rupee as prescribed under Rule 10 of the Company Audit and Auditors Rules 2014. Here, in the given case, Messrs. Q, wife of Mr. X, has invested in the equity shares of P Limited having face value of 1 lakh, which is within the prescribed limit, Therefore, XYZ can be appointed as an auditor of P Limited. Understood, right? Very simple provision, right? Auditor cannot hold. What this provision says? First provision says auditor cannot hold. Any relative of auditor cannot hold holding company, subsidiary to the holding company, and also associate company of that holding company. But further provision says relative can hold up to 1 lakh worth face value of the securities for the company in which his relative is going to get appointed as an auditor of the company. So here there is no disqualification. In this case, company can appoint that particular person whose relative is holding securities of up to 1 lakh rupee as a face value as an auditor, is qualified to be an auditor for that particular company. Now let me come to subsection sub question. In the same thing, there are 3 questions asked in one question. I am going to come to second question now. Mr. Q, wife of Mr. X, has given guarantee in relation to a loan taken by G from P Limited of an amount worth rupees 1,50,000. I am going to read the question again. Mrs. Q, wife of Mr. X, has given guarantee in relation to a loan taken by G from P Limited of an amount worth rupees 1,50,000. Now I am going to read the answer related to this question. As per section 141 subsection 3D3. As per section 141 subsection 3D3. Mrs. Q, wife of Mr. X, has invested in the equity shares. As per section 141 subsection 3D3 of Companies Act 2013, a person who or his relative or partner who has given a guarantee or provided any security in connection with the indebtedness of any third person to the company, or its subsidiary or its holding or associate company or a subsidiary of such holding company in excess of rupees 1 lakh, such person cannot be appointed as an auditor of the company. Very interesting, right? Conclusion is, in the said case, Mrs. Q, wife of Mr. X, has given guarantee to the relation to a loan taken by G from P Limited, which is in excess of 1 lakh, that is amount of worth rupees 1,50,000 given in the question. Therefore, XYZ company cannot be appointed as an auditor for P Limited. I hope this provision is very clear, right? Like how we read the provisions related to holding of securities, similarly the provision is related to guarantee also. If a relative is giving guarantee to any person outside the company for the indebtedness of that particular company, where his relative is an auditor of that company, he will be disqualified to be appointed as an auditor of that particular company, because his relative has given guarantee which is worth more than rupees 1 lakh. The provision is saying more than rupees 1 lakh. If relative is giving guarantee, then a person, relative person who is auditor will be disqualified to be appointed as an auditor. Very minute point, very thin line difference. If it is within 1 lakh, I think it is safe. The auditor is like face value. If it is within 1 lakh, securities, what we said in the earlier case, face value worth 1 lakh, a person can hold securities, right? Relative, a person can hold securities in the company, where his relative is an auditor. Similarly, if it is related 1 lakh, within worth 1 lakh, the guarantee is given, then I think it is safe. If it is beyond 1 lakh, guarantee is given beyond 1 lakh, and that becomes indebtedness to the company, then in such cases, relative of auditor who has given guarantee, that auditor is disqualified to be appointed as an auditor for that particular company. Okay, let me get into third question now. The same sequence. Mrs. Q, wife of Mr. X, is indebted to Z Limited for 10 lakh. P Limited holds 1/4 of the paid up share capital of Z Limited. Mr. Q, wife of Mr. X, is indebted to Z Limited. What is the question? Mrs. Q, wife of Mrs. Q, wife of Mr. X, is indebted to Z Limited for 10 lakh rupees. P Limited holds 1/4 of the paid up share capital of Z Limited. Okay, now let me come to answer illustration. As per section 141 subsection 3D2 of the Companies Act 2013, a person who or his relative or partner is indebted to the company or its subsidiary or its holding or associate company or a subsidiary of such holding company in excess of 5 lakhs. What is the amount? In excess of 5 lakhs shall not be appointed as an auditor. Here in this case, Mrs. Q, wife of Mr. X, is indebted to Z Limited for rupees 10 lakhs, whereas P Limited holds 1/4 of the paid up equity share capital of Z Limited, being an associate company of P Limited, and indebted is excess of rupees 5 lakhs. Provision is up to 5 lakhs, but in this case it is excess of rupees 5 lakh. Therefore, X, Y, Z and Co cannot be appointed as an auditor for P Limited. Understood? 3 questions in 3 different case studies in one particular question. First question: can auditor or his relative hold securities of 1 lakh worth up to 1 lakh or more than 1 lakh worth of securities face value? What I said, face value of 1 lakh rupees or more. Up to 1 lakh limitation is there. There is no restriction or disqualification of auditor. Yes, not auditor should not hold anything. No, auditor should not hold any security, but relative has exception. Up to 1 lakh worth of face value relative can hold, and there is no problem for the auditor. Auditor is qualified to be appointed as an auditor. Second case, guarantee. Person has given guarantee, relative has given guarantee which is above 1 lakh worth. Then yes, provision says disqualified. Auditor is disqualified. Auditor is disqualified to be appointed as an auditor in that case. Third case, indebtedness happened. The person is indebtedness to one person, and our limit is more than 5 lakh rupees. The provision says up to 5 lakh is okay, boss, but up to 5 lakh is okay. More than 5 lakhs not okay. In this case, it was 10 lakh rupees. Again, I'm going to read this last section just for